hypothetically, if China were to devalue, would it be positive or negative for the dollar? Quick answer is yes. Thanks for all you guys do. Do you have any additional thoughts?
No.
It's pretty obvious.
Or that we don't see. I mean, the Chinese yuan's down just over 1%, I think, for the year to date against the dollar. You can back check me on that, but I believe that's the number. The reason why it's not down a lot is because the Chinese have decided that it's not down a lot. I mean, it's a soft peg. It's unlike the Argentine peso, the Brazilian real, the Turkish lira, which are, again, those things can get what happens to those currencies and to their capital accounts is what's happening. So the Chinese have a closed capital account, and that is quite different than a lot of emerging markets and their currencies that you could look at otherwise.
Yeah, and then the problem with China devaluing is not the sort of sudden stop balance of payments crisis risk that we've seen historically in emerging markets, most recently from 2011 to 2015. That's not China's problem. China's problem is that there are a myriad of very wealthy Chinese investors on the mainland who are concerned about a material devaluation and will find very creative ways to get their money out, much like we saw in late 2015 when China sort of revalued the peg to sort of hit the midpoint of the market rate. So that is always China's biggest fear, is that they sort of destabilize domestic financial and capital markets as sort of investors, wealthy Chinese investors, sort of try to head for the exits. It's not sudden stop risk in this traditional sense that international investors have been plugging some current account or sovereign deficit. It's more just the Chinese themselves might actually be fearful of further devaluations.
Yeah, it's a very important point. And again, for those of you that want to review, the main reason why China is slowing is not in any sense, shape, or form hashtag tweet of the words trade war having to do with that. It has to do with them having to compare against the most epic stimulus in the history of China, okay? And that, again, as we'll remind even new subscribers, that is a very long time, okay? So if you look at slide 91 in the current macro deck, on slide 91 you could see at the same time in 2016, the Fed on the left side of this chart was effectively devaluing the dollar, dropping the forward outlook, that's the dot plot. The Fed was going dovish. This is commonly called as the Shanghai Accord, where Janet decided alongside the Chinese, which you can see on the right chart, you can see the 8% and the 13%, PBOC open market ops and PBOC medium-term lending, giving people as much as they could. You could see that was the biggest fiscal and monetary stimulus in the history of China, okay? And this is ahead of Xi being appointed for life. Now, if you look at the next chart, which is the final point that I'm going to make, and this is the most important chart when you think about why it is that I can make the statement that the reason why China is slowing is not because of Donald Trump. It's because they have to compare against Xi's epic stimulus. So you can see that. So right here, the Chinese right here stimulated big time. That's 15% growth at the peak or thereabouts in the secondary industries in China, which is what they can centrally plan, command, and control. And that equated to 50% of GDP, just like it did when they had to stimulate back here when the globe had its major slowdown. So again, this is why China's slowing. They have to compare against the most epic stimulus in the history of China. It is incidental, and I'm not saying it doesn't matter whatsoever in rhetoric alone, trade war, Trump, etc. But the real reason why we made the call on China was a cyclical call. This is what Wall Street really needs to have their pants taken down on. They need to be accountable to this. They need to tell you why they never, ever call cyclical slowdowns proactively. They don't do that. They talk about politics. Pundits talk more about politics. They blame this, that, and the other, and they do the whole macro tourism thing. That's why you're with us. That's why you want to fade them. It's a tremendous time in this business, because again, this is when we can capitalize on a large constituency of people that are on the bid and ask of markets that are doing literally the opposite of what they should be doing.